Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Morning Call, live from the CNBC TV-18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me is Surabhi Upadhyay. We are missing Anuj. Winter vacations and people are beginning December, even before December, with a little days, with a bit of vacation. But let's just look at what data we have from the global markets. I think the best data we got was from the US GDP numbers. At 3.3%, it's way better, 10% better actually, than the 3% which were the provisional numbers and the 3.2% which was a Reuters poll number. So strong GDP numbers, and this is actually 2 consecutive quarters of 3% growth for the US economy. So strong growth over there, and I think that's reiterating a pattern we have seen for the last 2 days, that developed markets are being preferred over Asian markets. And even today Nikkei is up, but the other Asian markets are down, and that was a pattern we saw yesterday as well. So a little bit of movement of money to DMs is clearly obvious. For the Indian markets, there is plenty to wait for. The most important, of course, will be the Indian GDP numbers for the second quarter, and this will be very useful at a time when we don't have other cues to work with, the result season being long over. We will also get the fiscal numbers. That is for the month ended October 31st. Now, these become important because they will move the bond markets. Yeah. And we really don't have much to go with the GDP. It's a very nebulous number. Therefore, these direct tax numbers, which we will get today, expenditure numbers, that will be important to know whether the Indian government is sticking to its fiscal deficit target. And a third important event, of course, will be the OPEC meet.
Oh, yes.
While, of course, Saudi Arabia and the OPEC countries may want to prolong, there could be some opposition from Russia, especially Rosneft, which will worry that it is losing production and therefore sales. Interesting to see whether they're able to extend the cuts to 6 months, 9 months or 1 year. So today, plenty of cues.
Plenty on our plate, absolutely. Good morning, Latha. Yes, you know, I take your point on the US GDP completely, because that's what powered that 100-point rally on the Dow. However, just sort of another voice of caution, and that's CB Vice President coming out and pretty much saying the same thing, sounding out a bit of a note of caution, a red flag on asset prices. Essentially, he also made the point, I mean, I'm just going to quickly read off what he said, that we see that some markets are overstretched, or at least with indicators that are away and above the historical averages. We see volatility both in the equity and the bond market being very, very low. Which experiences show in those situations may trigger a sudden revision in expectations by market participants. It's just adding to the set of voices, and a lot of them are central bankers, about the way stock markets are rising. But then the US market is rising on hard numbers, whether it's earnings or the GDP data. So that's perhaps something that we can take. Just one more point in terms of data. Good numbers from China as well this morning. The official PMI that's come out, no problems there, because it's above estimates. It's around 51.8. That's where the figure is, which is above the poll of around 51.6 thereabouts. It's not translating into gains across Asia. And that's something that we have to take note of, because yesterday, the way our market ended didn't inspire too much of confidence in the bulls, because we were barely there. We were breaking down. The last 15-20 minutes of trade, there was some buying coming back in, which made us hold that mark of 10,350. But the confidence seems to be missing from Asian trade this morning as well. And the SGX Nifty, as we can see, is down about half.
No, actually, you can pull up the intraday of all the indices, the mid-cap 100, the Nifty, as well as the Bank Nifty. All of them ended at the lowest point of the day.
Absolutely.
If not lowest, very close to the lowest point of the day. Yeah. So, yes, we are not starting with positive sentiment to that extent.
Absolutely. But let me come back to the big story. I mean, this GDP number, Latha, and, you know, what is the market going in with? 5.7, almost everybody was saying was an aberration. It's a GST issue. But in terms of this quarter, what is the consensus?
5.7 for 2 quarters is not an aberration. It was a genuine slowdown. And therefore, this number becomes very big. We did 5.6 in the Jan-March quarter, and April-June quarter, we did 5.7%. So there is a worry that this has to be 6 point something. Our own poll, Ekta's poll, is giving us a 6.39. This is GDP. GVA is what is more important, and that will come in at probably 6.29, as you can see. You know, this is more a talking point. Like I told you, for a market that is bereft of cues, this is a talking point. Otherwise, this number has a lot of holes, especially if there is one about 10-15% being contributed by trade transport. That category actually you cannot count. It's all your Udupi hotels and your small businessmen, small kirana shops. The data for that was never available. So you extrapolated from the service tax numbers and the excise duties. Both those data are not available. So how the CSO is going to calculate that big entry, Ekta's poll is giving a number. This is a nominal growth number of 9 to 10% in trade, hotel and transport. This is going to be total guesswork. So, you could easily get a 6.3 or you could get a 6.1 or you could get a 6.5 because that will easily give a 20 basis point swing to that number. If it is 6.5, should we beat our chest and say that growth is strong? I wouldn't think so. If it is 6.1, should we be morose? I wouldn't think so. Because that one number can be seriously volatile. At the best of times, our GDP numbers are not terribly reliable. And this time, when you're not even getting the extrapolation right, because you don't have a base tax number, this GDP number is going to be less reliable. So more as a market cue and a sentiment, but it's not going to give you a direction on the economy.
In any case, we will be glued and watching after 5:30 p.m. I think is when the data will be
5:30 exactly, to be precise. And before that, we should be getting the tax number as well. So enough for the market to chew.
Absolutely. On that note, let's get to some of the equity calls that we've got this morning. Mixo Das of JP Morgan says the current supportive macro environment and earnings momentum implies a sustenance of YTD, that's year-to-date market dynamics, both in terms of overall direction and the country's sector-style leadership. Thus, in Asia portfolio strategy, he recommends remaining overweight on China and Korea, being underweight Taiwan, India and ASEAN.
Okay, so that's not terribly positive. Money market cues today from Mohan Shenoy of Kotak Mahindra Bank. He says strong US data, progress in US tax reform bill, and Powell's statements indicate the December US Fed rate hike is on track. He says the US dollar has rallied and stabilized against most majors. He adds the rupee is strong on the back of custodial flows, expects the USD INR to trade in a range of 64.25, 64.55 for the day.
Okay, and on to bonds. Mohan says the buyback of short-dated bonds by the government is positive for the bond market. He says traders are now awaiting the second quarter GDP data, April to October fiscal update and the outcome of the OPEC meeting. He expects the 10-year benchmark bond yield to trade in a range of 7 to 7.05% for the day.
Okay, and now let's get to Mangalam, who's going to give us the world view.
Well, the US GDP data at 3.3% offered us easy ball to the Dow, and the Dow went ahead and hit a century on that. So 104 points on the Dow. Weakness seen in S&P 500 as well as the Nasdaq. The GDP, remember, grew 3.3% versus estimates of 3%. Last two quarters, they've grown higher than 3%. The big key star batsmen out there, United Health as well as JP Morgan Chase. The retail stocks continue to add some to their market cap. Macy's as well as Nordstrom gaining anywhere between 7 to 8%. But the losers were the Nasdaq components, Facebook, Alphabet as well as Netflix. As far as the European conditions are concerned, some runs were made in both CAC as well as the DAX. The FTSE lower on account of the inherent strength that we saw in the pound, which jumped higher after hitting 2-month highs against the dollar. So not good news for the British exporters. Talking about currency, it took 3 days for the Bitcoin to move from 9,000 to 11,000. Just about 3 minutes for the Bitcoin to move from 11,000 back to that 9,900 mark. So watch out for some volatility out there. As far as Asia is concerned, the Nikkei under pressure, Shanghai under pressure despite above estimates PMI data, as well as the Korean markets awaiting the decision of the Korean Central Bank. As far as SGX Nifty is concerned, indicating a cut of 50 points at the start.
Okay, thank you very much for all that. We will get you some statements from Janet Yellen as well in a bit, but we have a very important banker joining us now. The news is that the State Bank of India has raised interest rates by 100 basis points on bulk deposits across all maturities. But the numbers are very important. In most of these categories, remember these are bulk deposits. They are not deposits that you and I will keep with the State Bank. They are not term deposits like FDs that you and I purchase. These are bulk deposits, corporates which put in over 1 crore. So this is for 1 crore to 10 crore and 10 crore and above deposits. The rates have gone up from about 3/4, 4/4 to 4/4, 5/4. So we are really talking about a range of, of a very small range. But let's get Anshula Kant, the Deputy Managing Director and CFO of State Bank of India, on the issue. Good morning, Ms. Kant. Thank you very much for joining us. Basically, how much do bulk deposits form as a part of your total deposits?
They are a little in excess of 6%, Latha.
Okay. So even 100 basis point increase in the cost of 6% of your kitty will not move the needle much?
I don't really see it like that. I was mentioning, I don't know, to a few people, bulk deposits have been degrowing at about 30% year on year for us.
Oh.
And it was an outcome of the fact that last year in November, we had very drastically reduced the bulk deposit rates across all tenors. And, even after increasing this by 100 basis points, we are still almost 100 basis points lower than the market competition in most of the maturities.
Okay.
So, it was basically, there are always arbitrage opportunities in the market. So, it makes commercial sense for us to do this at this point of time.
But what prompted the rate hike then? Is it because you are heading into advanced tax period and maybe there will be, the banking system will be short on liquidity?
No, Latha, I don't think so. While banking system, the system liquidity is a different case in point. We are very comfortable on the liquidity front. It is not that. But there is the fact that we've been seeing consistent outflows from the demonetization inflows that we had seen. And now, if you look at the system-wide deposit growth also, given that the base effect will come into play, the demonetization deposits will now become part of your base.
Okay.
So if you see the year-on-year growth in deposits is going to really come down. Okay. And, when you see the various structures of our deposits, this is the one place we were really an outlier in the market.
So, ma'am, you said year-on-year deposit growth is going to come down. Are you talking about the third quarter? Is that the time period you're looking at?
Every day, you see this period last year, every day we were seeing huge inflows.
Absolutely, yeah.
Yeah. So, once you come, and I think they peaked by 31st December, and, this is the time when this will all become part of your base.
Yeah, that's true.
So,
and since then, we have seen, close to, I would say, about 70% of the inflow from demonetization deposits has actually
moved back
from the CASA into term deposits or out into mutual funds or wherever.
So, ma'am, this 100 basis points increase, what will that mean for margins?
Actually, it's difficult to assess pool by pool. But, if you're, for example, if your retail TD term deposit is slowing down, or the fact that you are able to deploy today, the peak bulk deposit rate we are now offering is 5.25. Even if you are able to deploy in T-bills or, reverse repo, it is accretive to your profitability.
Yep. Okay.
So, sometimes if you see, even though we are very comfortable on equity, we may be on the borrowing side because we do try to avail of these arbitrage opportunities.
But why would a bulk guy want to give you money at 5.25 and 4.25? He can buy treasury bills himself.
That's not always possible because bulk deposits don't come from, they are just 1 crore and above.
Yes.
So they come from all kinds of customers, small SME customers, large customers. And then, when you bid for these deposits with any PSU, we've stopped bidding actually because we are so way below the rest of the market.
Okay. Well, should we expect that for the next 2 quarters, your bank and most banks will report lower aggregate deposits than last year?
It's hard to say. I don't think it will be lower aggregate deposits, definitely not.
Okay.
But, the high growth number, 10% plus we have been showing, that will come down.
Okay. But since you are bidding up your price, albeit at very low levels, do you have enough loan demand?
Some of these funds are fungible. Like I said, if suppose today you think of a choice I have to make between bulk deposits to my very valued constituency, many of these are very valued customers, so we are on the asset side of it, but we are not able to offer them decent rates on the bulk deposits, say your corporate borrowers, etc. Okay. So these are existing relationships on the one hand. And, obviously these are not something which will replace your CASA. They will possibly replace something which maybe we are today borrowing in the market for arbitrage opportunities. And we don't expect a huge inflow in this.
Ma'am, since you're with us, I'll take the liberty of asking you just third quarter, loan growth, how are things looking?
Loan growth is picking up slowly, but it's a slow uptick. Okay. This is a busy season, so we have started to see drawdowns in your food processing and all of those things. But slow growth, yes.
Any guesses on how we might end third quarter in terms of loan growth or even the year?
Latha, I should have better than a guess. I have an estimate, but I wouldn't like to talk about it right now.
Okay. Yeah. All right. Well, just one final word. I agree that as Surabhi was asking you, even at 5.25, when you put it in a T-bill, you will get over 5.75. But right. Nevertheless, you were putting that money which you were getting at 3/4. Now that is going to be 100 basis points more expensive. Surely it will have some impact on margins?
I think, you should compare this with the cost of borrowing in the market for us.
Okay.
Not on this side, not on the placement side.
So even the mighty SBI could be borrowing in the market. Thank you.
For arbitrage opportunities, yes.
Fair point. But do you expect that there will be a liquidity crunch by the time we pay advance taxes? That banks could be good?
In the system, there are things are looking very tight, and that's telling on the bond yield as well. Yes. But for us, we are comfortable.
But, ma'am, since you mentioned the arbitrage opportunity, and as you explained that it'll still be cheaper than the money that you've been borrowing, could this arbitrage actually lead to margin improvement?
These are very small amounts, so I don't think it moves the needle for the bank too much.
Okay. Then a final word on bond yields. Where do you see it? Do you see it at 7.1 at all before the year is out? 7.10. It's not a long ask.
I know it's a long ask, but I think maybe we are keeping our fingers crossed. Maybe something will happen in the next 1 week, and we should see some softening.
1 week? You expect a rate cut?
No. Not a rate cut, but let's see the commentary.
Maybe a 10% fall in crude prices. You can be optimistic.
Right. Yes, there is an OPEC meet as well. Thank you very much, Ms. Khan, for joining us. At 7.02 now, the yield, and this is not any mean banker. This is the SBI expecting that something is going to come
in the next 1 week,
which might reduce yields. Let's wait and see.
All right. On that note, let's just shift back to the global cues. As we've been telling you, there's been a lot of central bank talk over the last 24 hours. And outgoing Federal Reserve Chair Janet Yellen told congressional leaders on Wednesday in her final testimony on Capitol Hill that the U.S. economy has gathered steam this year and will warrant continued interest rate increases amidst a strengthening global recovery. Yellen's testimony was a strong signal that the central bank is ready to boost its policy rate for a third time this year when it meets in December, something that her successor also hinted towards.
We do think it's important to gradually move our policy rate toward what I'll call a neutral level, which would be consistent with sustainably strong labor market conditions. And we want to do this gradually because if we allow the economy to overheat, we could be faced with a situation where we might have to rapidly raise rates and throw the economy into a recession. We continue to expect that gradual increases in the federal funds rate will be appropriate to sustain a healthy labor market and stabilize inflation around the FOMC's 2% objective.
I think this is not a sentence that should be taken very lightly, speaking about a possible overheating of the economy and therefore the need to raise interest rates and a series of interest rates is what she's talking about. Dovetail it with the Fed minutes, which once, just about a couple of months ago, worried that the asset prices, inflation and the very low volatility is a matter for concern. The OECD said that day before yesterday, and yesterday the ECB saying it. So, I mean, some reduction in global liquidity, or at least a rise in the cost of money, can be expected if so many central bankers are worrying about overheating and especially of the asset markets? Well, that's something that we're just putting on the table. We'll discuss it through the day. But today, I think we also need to remind you that it's an extremely eventful day for the market. One is, of course, the November series expires, and that's very important, even if the range of the series has been more limited. It was a series where we saw fresh highs for the market. Infosys buyback starts today. That could be significant for this big stock. And then GDP numbers come out after market hours. As we discussed, the OPEC meeting in Vienna, where there'll be a push and pull between the OPEC leaders and Russia for sure. Indiabulls real estate is going to be excluded from the F&O. That could have a minor impact. And more importantly, a slew of MSCI Global Standard Index changes, which will be effective shortly. All that will be coming up for you in detail in our top 10 list of stocks.
All right, welcome back. So we have our entire research team standing by to run you through the top 10 list of the morning. Lots of stocks, lots of events on our radar. Let's get started straight away. Latha, first and foremost, M&M Finance, because it seems the parent is now going to be infusing some money by buying stake.
Yes, this is routine. After all, how else do NBFCs get money? Either they have to raise debt in the form of NCDs or they have to raise equity. So nothing unusual about this. It's just the price is at 422 rupees compared to the current market price, which I think is at 445, if I'm not mistaken. So it's coming at a slightly lower price compared to the current market price. And therefore, you might have a sentimental negative. It's, of course, an equity dilution, which shouldn't be a bother because you're going to leverage that money and give
getting
loans
capital.
and you will get you will improve your earnings. So it's only a short-term negative. It's only the price that the market might think the money is coming in at a slightly lower price compared to the market.
Okay, fair enough. So that's M&M Financials on our radar. Speaking of NBFCs, here's another one, Indiabulls Housing Finance, Varinder Morning. So it's got an upgrade from CRISIL. Well, a rating upgrade.
Well, it's a rating upgrade which has come in, and this is the highest rating upgrade which has come to this company. Now at AAA, which is stable, and Indiabulls is the second private non-bank lender on a standalone strength, as the press release says, to get that rating. Now all the rating agencies, they have a AAA rating from all the rating agencies, which includes CRISIL, ICRA, and all others as well. Latha tells me that the yields are moving up, so immediately there will be not impact in terms of the lending, borrowing prices, for Indiabulls Housing Finance. But nevertheless, it's something which has come after a long time, and this institution, has been doing good. So I expect the stock to be in mild green today.
For one thing, the market actually recognizes it before the rating agency, and they start giving lower yields to their NCDs. And market wants two rating agencies. If two give you a AAA, they will treat you as AAA. So CRISIL, while it is the most respected, even then since it's coming in third, I don't know whether it moves the needle much for Indiabulls.
Okay, more
this is
in the finance
story.
space. Yeah, today it's all finance.
This is going to be very big. So it's an exclusive which Yash gave us yesterday, Yash Jain, that insurance companies can now have private equity guys holding more than 10% equity. Very big news for insurance companies. Yash, go ahead.
Well, out of the many crucial amendments cleared by the Insurance Regulator Board, the most important has to be approving the proposal to allow private equity players to invest over 10% in insurance companies, which will also bring a promoter status to these private equity players in the insurance companies. Of course, we are also going to understand that IRDA has subjected this increase in investment threshold to certain conditions, and the most important out of which is that this particular raise in threshold for investment will come with a 5-year lock-in period. Also, the funds which come through these private equity players will have to be subjected through an SPV or a special purpose vehicle, and also the chairman of this insurance company will have to be an independent individual who won't be allowed to represent any existing shareholders of that particular insurance company. Apart from the investment pattern, we are also given to understand that there were a series of business approvals which were granted by IRDA in yesterday's meeting. Reliance Health, which is a wholly owned subsidiary of Reliance Capital, has managed to receive the second level approval, or R2, for its business operations, which means that it's just one step away, which is R3, from starting its business operations. Also, two more health insurance companies, which are Jiva Healthcare and OCare Health Insurance have also received the preliminary approval for their business operations.
Just a quick clarification, this relaxation of 10% equity ownership by PE funds, that is available to both life insurers as well as non-life, right?
Exactly. Both life and non-life insurers will get to have private equity players investing more than 10%.
All right. Thank you very much, Yash, for that. Now, obviously, the three big boys who are listed are not going to bother about private equity, HDFC, ICICI, SBI Life, or for that matter, Reliance. But the smaller guys, I mean, the Cholamandalams, the Shriram is getting into insurance and they wouldn't mind private equity of over 10%. Exide has been looking. So these are the companies that you should look out for where there could be interest.
Okay. On that note, let's move on to Sun Pharma. Ekta is joining in. Slight bit of sunshine, Ekta, for Sun?
Well, yes, positive news which is actually coming from a CS note or a Credit Suisse note this morning, where they have indicated that the October 2017 IMS data has highlighted that Sun has restarted supplies for a few products from the Halol facility, and these include a nasal spray, a Parkinson's disease drug. So hence it should be incrementally positive for them. Also, they have mentioned that Sun sales are up 8% on a Q1Q basis. They've gained market share in the likes of Gleevec generic from Apotex as well. Gleevec generic is a cancer drug that Sun Pharma sells in the US, and hence net it should probably bode well for their numbers in the next quarter. And if you dig deeper, it would be interesting to know what it means in terms of the remediation for Sun Pharma and Halol as well.
Okay. Thank you very much for that good news finally for the pharma sector, especially for Sun. Nigel, why are you watching Sagar Cements?
Well, Latha, you know, we always associate wealth creation in the cement space with Shree Cements. Well, Sagar Cements for the last 10 years has done, in fact, a tad bit better than Shree Cement in terms of wealth creation. But the reason we're tracking it today is because Edel, they have come out with a note. They have a buy rating on Sagar Cement, and they have a target price of more than 1,100 rupees. Why? Because they're saying the bifurcation of Andhra Pradesh and Telangana, that's really good for them in terms of demand. They've also acquired this BMM plant. That's going to reduce their lead distance between their manufacturing unit and the markets that they're supplying to. So that's going to help them increase their EBITDA per ton from currently 650 rupees to more than 1,000 rupees. They also have limestone that's close to them, and that as well is an additional kicker. Remember, the current capacity is 4.3 million tons. It's likely to move to around 5.5 million tons in the next couple of years. Edelweiss positive, the stock should open up in the green.
All right, thanks, Nigel, so much for that. Well, there were a couple of block trades yesterday, so let's find out what the interesting patterns were like, the buyers and the sellers. Manglam has those details. Manglam.
Yes, Surabhi. So the first one is Den Networks. We had one of the FIIs, Spruce House Partnership. They sold about 30 lakh shares in the company of the 37 that they held as of September. But they sold it to another FII, Norges Bank, on account of the pension fund. So that is a positive. Another thing, despite the promoters selling some stake, the fact that an FII has picked up stake in Den Networks, see some positive there. But Action Construction Equipment, ACE as we know it, sees some bit of red there despite GMO Opportunities Fund buying about 1% stake. 10.67 lakh shares is what they bought. That is because the seller was a promoter. Mona Agarwal sold about 50 lakh shares. That amounts to 4.3% equity, which was bought by GMO, only 1%. So the remaining 3% buyers is something that we do not know. Promoter selling 4.3% is something that the street might not like.
Yeah, I mean, they were buying stake earlier, the ACE promoters, and now, I mean, obviously, there's a sale that's come through. Thanks, Manglam, for that. Varinder is back with us because he has his eye on Jet Airways. What now, Varinder?
Well, you know, Jet Airways was in focus yesterday, and the reports are suggesting today that Jet Airways and possibly SpiceJet is very, very small, you know, in this regard, that they may bid for Air India. No one wants to miss that chance because Air India, of course, has that 14% domestic share and nearly 17 to 18% international market share. Jet now, of course, has international backing with, you know, all the major partners coming in yesterday on yesterday's news. CNBC TV-18 independent has not verified this news, but if this is true, we knew what happened when you know, when the Indigo name came in for Air India. Possibly because the markets are weak, the stock could be mild in red, but again, there is no confirmation coming in from anyone on this news.
Yeah. Okay. And it's a very distant purchase.
Exactly.
I don't think it's going to happen this year. Exactly. The government has enough on its plate, so it's something for FY19. Okay, Nigel, back to you. Infosys buyback starts today. You've been watching this very closely. Any impact we should see today?
Actually, Latha, it's not much of an impact in terms of today's trading session, but yesterday as well, we saw a sentiment move in terms of Wipro. So that's why we're just alerting our retail investors that yes, the buyback starts today. The brief details should be up for you on the screen. They're looking to buy more than 11 crore shares at a price of around 1,150. But retail shareholders, remember, you should have held the shares as of November 1st, 2017. Only then would you be eligible for this buyback. The close price on November 1st was around 927 rupees. So if it would be qualified for retail, 2 lakhs divided by 927, that in fact is the number. So you should have roughly around 215 shares classified under this retail category. The total number of retail shareholders had moved up to around 5.97 crore shares, and that would mean acceptance ratio of around 28%, presuming everyone comes to tender in. If the number of people coming to tender in reduce, then your acceptance ratio goes up. So just watch out for the stock today. Remember, you should have held the shares as of November 1st, 2017.
All right. Thanks a lot for that, Nigel. But there are a slew of changes in a couple of MSCI indices.
Well, Latha, this news came around 2 weeks back, but the effective change will be done today. And we have seen in the past that it's the last 15-20 minutes of that trade when all these changes are made. Why it is important? Because, as everyone knows, that there are active investors, there are passive investors. Active investors, when the news comes, they start reshuffling their portfolio according to whatever the additions or deletions are. And the passive ones normally do in the last 15-20 minutes. So the few stocks which you should keep an eye, the additions were Britannia, Petronet and Vakrangi. So you could possibly see buying happening in the stocks in the last 15-20 minutes. And the deletion was Apollo Hospital. There are many small cap changes as well, which will run on your screen. But the important ones are Britannia, Petronet, Vakrangi.
Okay, so those will see a positive hue.
Could see.
Okay. And Ronit, as always, manages to find some interesting results for us. Which ones are on your radar this morning, Ronit?
So 2 small cap companies on my radar. So first I'll start with Mukta Arts, strong set of numbers after a long time. Revenue up 43%, as well as they report an EBITDA profit of 8 crore versus a loss, as well as they report margin of 23%. Moving on to TBZ, weak set of numbers coming for Tribhuvan Das. Revenue was down 27%, as well as the margins were down 160 basis points, and the profit after tax, that's what stole the show, came around 90% lower. So on the back of this, you can expect the stock to be in the red.
This is so peculiar. Thank you very much, Ronit. Not holding you for these numbers. But PC Jewelers says that they're going to sell 30% more, and these guys report 27% lower. And normally in Bombay, when you ask someone where are you going, you say Zaveri Bazaar. Zaveri, TBZ is such a big brand. I mean, I'm a little amazed that they are not able to cash
TBZ
in
and Gitanjali, I remember because this conversation we had before Diwali when we were interviewing them on Money. These two companies have had a far more cautious approach to things than PC Jeweler and Titan. Obviously, it's showing up in the stock prices as well, but different trends coming out within the jewelry space for sure. On that note, let's quickly recap our list of stocks for the morning. Stocks that could see some green include Indiabulls Housing Finance, Exide, Cholamandalam Investments, Den Networks, Sagar Cement, Sun Pharma, Infosys, Britannia, Petronet LNG and Mukta Arts. Stocks that could be under pressure today include Action Construction, Apollo Hospitals, TBZ, Jet Airways and SpiceJet.
Okay. Well, I think the big story that Yash broke for us and repeated by phone today, that sources are saying the insurance regulator has approved private equity investors to hold over 10% in insurance companies. Is this something that they will want to do? Ashwin Parekh, Managing Partner, Ashwin Parekh Advisory Services, has joined us on the phone line. Good morning, Mr. Parekh. Thank you very much for making this early and unscheduled stop with us. What's your sense? Is this going to be positive for the smaller insurance companies?
It is. In fact, if you look at the performance of the life and the general insurance companies in the two respective sectors, you'll observe that the first 8 or 9 in each classification are in some form or the other in a position to raise the capital. Either the promoters have deep pockets and therefore they can really put in the kind of capital, or they're ready to take it to the market as well. So we've already seen, that the first 4 or 5 are preparing in both the classes, are preparing for IPOs. The capital requirement for these smaller ones, the last 8 or 10 of them, who seem to be doing well, the sector is doing well, life insurance has been growing well, general insurance is growing even better. So in that scenario, private equity will have a place. This is a very good reform, I must say. That this is a very good reform for the industry, the capital requirement of the smaller ones, the smaller insurance companies, will be provided on both the counts. There was a fear that the lock-in period can be extended more than 5 years.
Yeah.
But that's another change that the regulator has come out with.
Mr. Parekh, Mr. Parekh, there is IDBI Federal Life Insurance, and I think Canada Rebecco as well. These are banks, parents who need capital anyway. Do you think they will be the guys to take advantage?
Well, actually, they could. You see, because all the banking companies, particularly the public sector banking companies, we've seen, that in the last 7-8 years now, because of the capital constraint, they've not been able to put adequate capital into their insurance businesses. And this will give them at least a leeway. One more classification or class of assets of investors into their companies.
But your expectation is PEs will rush in?
Well, see, you have two sets of PEs over here. We've got the domestic ones and also we've got the overseas ones. So, depending on that 49-51% breakup, both the sets of PEs will certainly be interested, because you've seen the multiples. You've seen that holding a stock, let's say livestock, for 5 years will certainly, if you can really bring the company to take it to the market, then you can exit, you can unlock that value much better, in fact, at that stage. So there would be an excitement, I would say, not a rush, but there will be an excitement with the PEs.
Mr. Parekh, sir, but, with the listings now, obviously valuation multiples have moved higher and there is a premium, there is a market benchmark. So can that make it a little tougher to really get the deals going? Just the pricing. There are growth estimates. For instance, Moody's, I was just going through their report. They're saying for non-life, premium growth is going to be in double digits, just looking at the GDP growth. But what about multiples?
Well, this is the whole point. You see, if you saw a lot of PE activity before, let's say the companies went to the market, the multiples were, the benchmarking was a little difficult. PEs did find it very difficult. Now, at least there are established benchmarks. Now, within those benchmarks also, can very clearly distinguish those who have the potential and those who already sort of, perform so well. So the multiples will also, I suppose, the factors will adjust, in keeping with who's got potential and who's already got it, or who's even going to get much better, sort of, So already, in fact, some of the transactions where we are involved, I am involved, we are taking those factors into consideration.
Okay. Well, that's a bunch of M&A activity that our M&A reporters will have to dig out. Thank you very much, Mr. Parekh, for joining us with those initial take on the issue. Well, I can see PNB MetLife, PNB needs capital. Canada Rebecco, Canada could do with a little bit of capital. IDBI, Federal, both could do with capital. Federal perhaps can raise anyway, but IDBI would like to raise some money. Exide and Chola, as we were saying. So there could be quite a few people who can cash in on this.
Absolutely. So insurance, a play worth watching out for. On that note, we need to take a quick break, but on the other side, we get our technical conversation started. How is the market setup looking this morning? What are the trades you can work with? We will have Ashwini Gujral, Sudarshan Sakhani, as well as Mitesh Thakkar joining in with the picks.